Introduction. The market is a mirror. Every trader begins the same way, chasing profits, setups, and signals. You open your charts, your heart racing with possibility. You see opportunity everywhere, a pattern forming, a candle breaking, a signal flashing green. You imagine yourself catching the move, closing the trade, doubling your account. It feels electric. It feels like this time, you figured it out. And then reality hits. The market moves the other way. Your confidence fades. You tell yourself, it's just bad luck. But deep down, you know it's not the market that's against you. It's you. The truth is, the market doesn't reward the smartest traders. It doesn't reward the ones with the best strategy or the fanciest chart setup. It rewards the ones who can stay calm when everyone else is losing their minds. It rewards discipline over excitement, patience over impulse, and self-control over emotion. That's the real game. And that's the part almost no one talks about. When most people think of trading, they think of charts, indicators, and predictions. But trading is not a game of prediction. It's a test of psychology. Every click, every trade, every moment of hesitation or greed, it's a mirror reflecting who you are. You see, the market has no feelings. It doesn't care who you are, how much you've studied, or how badly you want to win. The market doesn't know your name. It doesn't owe you a profit. It simply reflects your actions, your decisions, and most importantly, your emotional state. And that's the first great lesson of this audiobook. The market is a mirror. It reflects your fear. It magnifies your greed. It exposes your lack of patience, your self-doubt, your overconfidence, and your ego. The charts don't lie, they simply tell the truth about you. When you understand this, everything changes. Trading stops being about predicting the market and starts being about mastering yourself. Because when you truly think about it, what causes your losses? Is it the market? Or is it that you broke your own rules? You moved your stop loss. You chased a setup. You traded out of boredom. You didn't stick to your plan because your emotions took control. And that's not a lack of intelligence, that's a lack of discipline. That's why the market doesn't reward the smartest people. It rewards the most self-controlled, the illusion of control. Let's talk about one of the biggest traps traders fall into: the illusion of control. You feel in control when you click the buy or sell button. You feel in control when your analysis looks perfect. But in truth, the moment you enter a trade, you've surrendered control. You can't control what the market does next. You can't control the next candle, the next news event, or the next wave of liquidity. All you can control is you, your risk, your reaction, your mindset. The illusion of control is what keeps traders stuck in frustration. They keep trying to control the market instead of controlling themselves. And the more they try to force outcomes, the more chaotic things become. The market is like water, it flows where it wants. You can't push against it. You can only flow with it. That's why this audiobook isn't about teaching you how to predict the market. It's about teaching you how to flow with it. To align your psychology, your behavior, and your discipline with the rhythm of the market itself. Why most traders lose. Let's be honest. Most traders don't fail because of bad strategies. They fail because of bad habits. They overtrade when they should rest. They double down when they should cut losses. They seek revenge instead of reflection. They follow emotions instead of systems. Most traders lose because they treat trading like a shortcut to wealth instead of a path to mastery. If you think trading is about making money fast, the market will humble you fast. But if you treat trading like a craft, something to be honed, refined, and respected, then the market becomes your teacher. You see, trading is not punishment, it's feedback. Every loss is a mirror showing you something about yourself. Every win is a reflection of your patience and preparation. If you can learn to see that feedback as valuable, you'll grow faster than 95% of traders out there. The mirror principle. This is the foundation of everything we'll explore together. The mirror principle. It's simple. Whatever emotion you bring to the market will reflect it back tenfold. If you trade with greed, it will expose your greed. If you trade with fear, it will confirm your fear. If you trade with patience and self-trust, it will reward you in time. The market is neutral, but you are not. And that's why mastering yourself is the highest form of trading education there is. Because think about it, if two traders have the exact same strategy, why does one win and the other lose? It's not the system, it's the state of mind behind it. You are the variable. You are the edge. That's the law that underpins every other law in this audiobook. The purpose of this audiobook. This audiobook isn't about theories or complicated technical setups. It's not about fancy indicators or hidden market secrets. It's about you, your habits, your psychology, your ability to stay composed in chaos. It's a personal trading coach in audio form, designed to guide you through the 10 timeless laws of trading that will help you master the only part of the game you can actually control, yourself. Each chapter you'll hear in this audiobook is built on one core idea, that the outer game of trading, entries, exits, setups, is a reflection of your inner game, patience, discipline, mindset. We'll talk about the law of mindset and how your self-image dictates your results. We'll uncover the law of emotional control, so fear and greed stop running your decisions. We'll explore the law of business thinking to help you treat trading like a professional enterprise, not a hobby. We'll go deep into the law of process, the law of risk, the law of discipline, and more, each one designed to help you build consistency from the inside out. By the time you finish, you'll understand why trading success is not about predicting, it's about preparing. It's not about control, it's about acceptance. And it's not about reacting, it's about responding. The inner revolution. The greatest traders don't fight the market, they flow with it. They've mastered their emotions, their patience, and their identity. They've learned that trading isn't about chasing money, it's about becoming the kind of person who can handle money. When you master the inner game, the outer results follow naturally. When you learn to regulate emotion, you gain clarity. When you learn to embrace loss, you reduce fear. When you build discipline, you create consistency. The laws you'll hear in this audiobook are not shortcuts. They're frameworks. They're principles that have stood the test of time, used by traders, investors, and entrepreneurs who've built wealth by mastering their mind first. Yay, the invitation. So here's the invitation. Over the next few hours, let this audiobook challenge you. Not to trade harder, but to think deeper. Not to chase profits, but to chase mastery. Not to control the market, but to control yourself. If you listen carefully, take notes, and apply what you learn, you'll start to see a shift. Your reactions will soften. Your patience will grow. Your confidence will stabilize. And one day, you'll look at the charts, and instead of chaos, you'll see patterns. Instead of fear, you'll feel calm. Instead of uncertainty, you'll trust your process. That's when you'll know you've stopped trading against the market and started trading with it. Because in the end, the market is nothing more than a reflection of human behavior, a mirror of collective fear, greed, and emotion. And when you master yourself, you master that reflection. So before we begin, take a deep breath. Let go of yesterday's losses. Forget tomorrow's profits. Focus on now, this moment, the only one that truly exists. This is where transformation begins. This is where trading stops being a game and becomes a discipline. Welcome to the law of trading, where your greatest weapon isn't your system, it's your mind. Chapter 1. The law of mindset. Your inner game determines your outer gains. They say trading is 80% mindset and 20% skill. But most traders live as if it's the other way around. They spend years studying strategies, price action, and indicators, but spend almost no time studying the person pressing the buttons. Yet, every losing streak, every revenge trade, every moment of hesitation or fear comes not from the chart, but from the mind behind the chart. The truth is simple. Your outer trading results are a reflection of your inner state of mind. If you want to change your results, you must first change your relationship with yourself. 1. The inner game comes first. Every trader starts with a dream: financial freedom, time freedom, independence. You imagine yourself trading from your laptop, calm and confident, profits flowing effortlessly. Well, but what you don't see in that dream is the inner battle. The fight between discipline and impulse, patience and panic, clarity and chaos. Because trading isn't just about money. It's about mastering the self. The charts are just the scoreboard. The real game is invisible. It's happening inside your head every single day. If you've ever asked yourself, why do I keep repeating the same mistakes? Or, why do I do the exact opposite of what I know I should do? You're about to find your answer here. 2. Trader identity versus trade execution. Let's start with something most traders never think about: identity. You can't act consistently in a way that conflicts with who you believe you are. You can study all the strategies in the world, but if you still see yourself as an emotional trader, you'll find a way to prove that identity right. If you see yourself as undisciplined, you'll subconsciously act in ways that match it. Your actions always align with your self-image. That's why some traders stay stuck for years, not because they lack skill, but because their identity hasn't evolved to match their goals. Let's compare two traders. Trader A is focused on trade execution. He says things like, I just need to find a better setup. I just need to fix my entries. I just need to control my emotions. But his mindset is still fragile. He ties his self-worth to his last trade. When he wins, he feels powerful. When he loses, he feels worthless. He's chasing performance instead of identity. Now, Trader B thinks differently. She focuses on who she's becoming, not just what she's doing. She builds systems that reinforce her identity as a professional decision maker. She journals not to record profits, but to record patterns in her behavior, not just her trades. She understands that trading mastery isn't about getting better entries. It's about becoming a calmer, clearer version of herself. That's the difference between trade execution and trader identity. One focuses on fixing actions. The other focuses on transforming character. 3. The subconscious saboteur. Most traders think their problem is lack of discipline. But discipline is not the problem, it's the symptom. The real issue lies deeper in your subconscious mind. That's where your habits, beliefs, and fears live. You might consciously say, I want to be a successful trader. But subconsciously, a voice inside might whisper, I don't deserve success. Or, I always mess things up. Those invisible beliefs quietly control your behavior. They make you hesitate to take good trades and make you chase bad ones. They keep you stuck in patterns of self-sabotage because your subconscious always seeks to stay consistent with your self-image. If you believe you're a struggling trader, your brain will literally create behaviors to keep you struggling. If you believe you're a professional trader, you'll naturally act with more patience, precision, and confidence. This is why mindset work isn't just motivational fluff. It's mental reprogramming. You're not learning to trade, you're learning to become the kind of person who can handle trading. 4. How to reprogram your trading mindset. You don't rise to your goals, you fall to your systems. To change your mindset, you must train it, just like a muscle. Here's a simple framework used by elite traders and peak performance coaches alike. Step 1. Awareness. You can't change what you don't understand. Start by observing your trading emotions in real time. When do you feel anxious? When do you feel greedy? When do you feel the urge to break rules? Write them down after every trading session. Your journal is not for trades, it's for your trader mind. Step 2. Reflection. Ask yourself, what belief or fear caused that reaction? Maybe it's fear of missing out. Maybe it's fear of being wrong. Maybe it's the need to always be in control. Once you identify the cause, you take away its power. Step 3. Reframing. Every emotional pattern can be rewired. Instead of saying, I need to make this trade work, say, I need to follow my process, that's my real win. Instead of saying, I lost again, say, I paid for another lesson in discipline. Your words shape your identity, and your identity shapes your trading. Step 4. Repetition. The subconscious learns through repetition, not intensity. Affirmations, visualization, and journaling are not cliches. They're conditioning tools. If you say, I am a disciplined trader every day and act accordingly, your brain starts wiring that belief into your default identity. Over time, your mindset becomes your autopilot, calm, focused, and resilient. 5. Think like a professional decision maker. Professionals don't chase profits. They execute decisions. They don't need to feel good to trade well. They follow systems, not emotions. Here's the difference. The amateur asks, will this trade make money? The professional asks, does this trade align with my plan? One is driven by emotion, the other by process. Professionals know they can't control outcomes, only inputs. They measure success not by results, but by consistency. That's why they can take a loss without breaking down. Because to them, a loss isn't personal, it's data. That's the mindset shift. You stop thinking like a gambler chasing luck and start thinking like a CEO managing probabilities. 6. Building a professional mindset system. Let's make it practical. You can train your trading mindset just like a gym workout. Here's a structure you can implement starting tomorrow. 1. Pre-trading routine. Before you touch a chart, center yourself. Ask, am I trading to follow my plan or to feed my emotions? Is my mind calm or am I chasing something? Take 3 slow breaths. Set an intention for the session. Today I will execute with clarity and patience. 2. During the session, monitor your internal dialogue. If you catch yourself thinking, I need to win this trade, pause. Remind yourself, I don't need to win this trade, I need to trade my plan. That single sentence can save your account. 3. Post-trading review. Don't just log wins and losses. Log your emotions. What triggered your impatience? What pattern keeps repeating? That's where the real growth happens. Over time, this habit creates emotional intelligence, the skill that separates consistent traders from impulsive ones. 7. Morning mindset. Reset. Every morning, before you open charts, reset your inner state. Think of it like calibrating your instrument before flight. Here's a simple 5-minute ritual used by many elite traders. 1. Breathe. Close your eyes and take 5 deep, slow breaths. Inhale control, exhale tension. Remind yourself, the market doesn't owe me anything today. I'm here to execute my edge. 2. Affirm. Repeat affirmations that anchor your identity. I am disciplined. I follow my plan. I focus on process, not outcome. I trade from a place of calm confidence. 3. Visualize. Imagine yourself handling a losing trade with composure. See yourself closing the laptop peacefully. That image trains your nervous system for calm under stress. 4. Commit. Set one daily standard, not a goal like make $500, but a standard like follow my stop loss every time. Let that be your victory for the day. 5 minutes of intentional mindset work can transform the next 5 hours of trading. 8. When mindset gets tested, let's be real, even with a strong mindset, you'll still face chaos. There will be days when every trade goes wrong, when your patience cracks, when your old habits return. That's normal. Growth doesn't mean perfection, it means awareness. When those moments hit, remember this. You're not regressing, you're retesting. The market is checking if your mindset is real or just convenient. Anyone can be disciplined when they're winning. But the true test is how you behave when you're losing. Do you stay grounded? Do you follow your system? Do you pause instead of react? That's the difference between traders who last and traders who quit. You're not trying to eliminate emotion, you're learning to manage it. You're not trying to be fearless, you're learning to act despite fear. That's real strength. 9. The feedback loop of mastery. Here's how trading mastery really works. Mindset creates behavior. Your thoughts influence your trading actions. Behavior creates results. Your actions produce outcomes, good or bad. Results reinforce mindset. If you stay disciplined and see progress, confidence grows. If you break rules and lose, frustration grows. So the loop feeds itself for better or worse. To master trading, you must interrupt the negative loop and install a positive one. When you follow your plan, reward yourself mentally. When you break your plan, review it with curiosity, not guilt. You don't need perfection. You need progress. Each day you trade with a little more discipline. You're strengthening your inner game, and that will reflect in your outer gains. 10. The mindset blueprint of winning traders. Let's summarize what defines the mindset of consistently profitable traders. They detach their identity from their results. They embrace losses as tuition, not failure. They operate from systems, not emotions. They review themselves more than the market. They value survival over excitement. They think long-term, even when trading short-term. They understand this truth. You don't need to beat the market. You just need to outlast your emotions. That's the foundation of the law of mindset. Once you master it, everything else, strategy, execution, analysis, falls into place naturally. Because mindset is not just a trading skill. It's your operating system, and everything in your trading life runs on it. Closing reflection. Take a moment right now. Think about the trader you've been and the trader you're becoming. Are you reacting or responding? Are you chasing or executing? Are you identifying as a struggling trader or evolving into a professional? Remember this law? You don't trade the market. You trade your beliefs about the market. If you believe it's chaotic, it will feel chaotic. If you believe it's a teacher, it will teach you. If you believe you can master yourself, the market will start reflecting that mastery back. The law of mindset is simple, but it's everything. Your inner game determines your outer gains. When your mind is calm, your trading becomes clear. When your identity aligns with discipline, your results follow naturally. So before you try to master the next setup, master the one thing that never changes, you. Chapter 2. The Law of Emotional Control. Mastering Fear, Greed Impulse. The market doesn't move because of numbers. It moves because of emotions. Fear, greed, hope, regret. Every candle on your chart is the story of human emotion, multiplied by millions of traders pressing buy and sell at the same time. And here's the truth that most never realize. You don't trade the market. You trade your emotions reacting to the market. Every decision you make, from clicking buy too early to holding losers too long, starts in your emotional brain. If you don't control it, it controls you. The emotional cycle of every trader. Let's walk through what really happens inside most traders' minds. It starts with euphoria. You win a few trades in a row. You feel unstoppable. You tell yourself, I finally cracked the code. Your confidence becomes overconfidence. You size up. You stop following your plan. And the moment you start believing you can't lose the market humbles you. That euphoria turns into fear. You hesitate to take new trades. You second-guess your analysis. You stare at the screen waiting for confirmation, but deep down you're afraid of losing again. Then comes revenge. You want your money back. You chase setups that aren't really there. Your rational brain shuts off. Your emotional brain takes the wheel, and before you know it, one bad trade turns into 3. This is the emotional cycle that traps most traders. Euphoria, fear, revenge, regret. And until you break that cycle, you'll repeat it again and again, no matter how much technical knowledge you have. Why emotions? Rule the market. To understand why emotional control matters, We need to go inside your brain literally. Your amygdala is the part of your brain responsible for fear and survival. It's ancient, primitive. It reacts to threats before your logical brain even wakes up. When you see a trade going against you, your amygdala fires off the same chemical signals as if you were being chased by a lion. Your body floods with cortisol and adrenaline. Your heart rate rises. Your breathing changes. You're not analyzing the market anymore. You're fighting for survival. That's why you cut winners too early and hold losers too long. It's not lack of discipline. It's biology. The brain treats financial loss the same way it treats physical danger. It's not about logic, it's about pain avoidance. And then there's dopamine, the chemical of anticipation and reward. Every time you win, your brain gets a dopamine hit. It feels good, addictive even. That's why traders chase setups that aren't there not because they're stupid, but because they're addicted to the feeling of trading. You're not addicted to the market. You're addicted to the chemistry of uncertainty. The real skill, emotional regulation. So how do top traders manage all this chaos? They don't suppress emotion. They regulate it. There's a huge difference between ignoring emotions and mastering them. Ignoring emotions leads to explosion. Mastery leads to freedom. Here's the key idea. You can't control your emotions, but you can control your response to them. Professionals feel fear and greed too, but they've trained their minds to pause before reacting. That pause is everything. The 10-second rule. Let me give you one of the simplest yet most powerful tools for emotional control. The 10-second rule. Whenever you feel the urge to enter or exit, impulsively stop. Count slowly from 1 to 10. During that time, take one deep breath and ask yourself 3 questions. Is this trade part of my plan? What emotion am I feeling right now? If I do nothing, what happens? This 10-second pause creates space between impulse and action. That space, that tiny gap, is where control lives. Your job isn't to be emotionless. It's to create enough distance between emotion and execution that your logic has time to speak. The detachment paradox. Here's another truth that seems contradictory but isn't. The less you care about the outcome of any one trade, the better your outcomes will be. When you detach emotionally, you allow probabilities to play out. You stop forcing the market to do what you want and start listening to what it's trying to tell you. Detachment doesn't mean apathy. It means you trust your process so deeply that one loss doesn't shake your identity. Professional traders don't chase wins. They manage losses. They know that one red candle doesn't define them, because emotional stability is their edge. Techniques to neutralize emotional triggers. Let's make this practical. Here are 5 techniques you can start using immediately to take back emotional control. 1. Label your emotion. When you feel fear, greed, or frustration, name it. Say it out loud. This is fear. This is greed. This is frustration. The act of labeling engages your prefrontal cortex, the logical part of your brain, and helps deactivate the emotional storm. Once you label it, it loses its power over you. 2. Control your physiology. Your emotions follow your body. So control your body and you control your mind. When you notice yourself getting anxious, take deep, slow breaths. Relax your shoulders. Step away from the screen. Remember, your breathing is your emergency brake. 1 minute of conscious breathing can save you from 10 impulsive mistakes. 3. Predefine your reactions. Before you enter any trade, decide how you'll react to both outcomes. If the trade wins, what will you do next? If it loses, what's your recovery process? This removes uncertainty, which removes emotional chaos. You've already made the decision before emotion shows up. 4. Limit your dopamine. Check fewer charts. Avoid social media traders flexing their profits. Stop obsessively checking P&L. Every time you refresh your account, you're triggering dopamine and training your brain to crave the outcome, not the process. 5. Create an emotion log. After every trading session, write down what emotions you felt, what triggered them, how you responded. Over time, patterns will emerge. You'll start seeing your emotional weaknesses as clearly as you see chart patterns. Thus, this awareness is what turns amateurs into professionals. The physiology of calm. Let's go deeper. When elite soldiers train for combat, they don't focus on removing fear, they train to perform under it. That's exactly what trading is. Performance under pressure. Calmness isn't natural, it's trained. You can't stop your hands from sweating or your heart from racing during a big trade. But you can train your nervous system to interpret those signals differently. Here's a secret. Your body doesn't know the difference between fear and excitement. They feel identical. The only difference is the story you tell yourself about what's happening. So next time your heart starts pounding before a trade, don't say, "I'm scared." Say, "I'm ready." That one reframe changes your entire physiology. The trader's emotional loop. Let's break down the inner dialogue of two traders to show how mindset shapes emotion. Losing trader. I can't believe I missed that entry again. I'm such an idiot. I need to make that money back. I'll double my size next time. Result. Emotion drives action, losses, repeat. Winning trader. I missed that entry. That's fine. What did I learn? I'll wait for the next high probability setup. My goal isn't to win this trade, it's to execute my plan. Result. Logic drives action, consistency follows. Both traders feel emotion, but only one lets emotion inform their decision, not control it. That's emotional mastery. How to train emotional detachment. Reduce trade frequency. The more trades you take, the more emotional noise you generate. Quality beats quantity. Automate rules. Use stop losses, alerts, and scripts to remove emotional interference. Use affirmations that anchor you. Simple phrases like, "I don't need to trade, I choose to trade." "The outcome doesn't define me, my process does." "I am calm, I am patient, I follow my edge." Take intentional breaks. Step away after every intense session. Reflect before re-entering the market. Visualize detachment. Before trading, imagine yourself observing the market like a scientist, curious, not reactive. A lesson from poker. Think about professional poker players. They make decisions under extreme pressure, with incomplete information and real money on the line, just like traders. But what separates pros from amateurs isn't luck. It's emotional neutrality. They never go all in emotionally. They know that the outcome of one hand means nothing. It's the long-term edge that counts. Trading works the same way. Every time you attach your ego to a single trade, you hand your power to the market. Detach and you take it back. Turning emotion into energy. Here's the most powerful shift of all. Instead of fighting emotion, use it. Fear means you care. Greed means you're ambitious. Frustration means you're learning. Every emotion is energy. Channel it into focus, not frustration. Into patience, not panic. When you stop labeling emotion as bad, it stops hijacking your behavior. The takeaway. At its core, the law of emotional control is about this truth. The calmer you are, the clearer you see. The market rewards composure. The more centered you stay, the more mistakes your competitors make. That's your real edge. So, next time you feel your emotions rising, pause, breathe, label, detach. Because in that moment, you're not just controlling emotion, you're building mastery. Trading success isn't about controlling the market. It's about controlling yourself. When you master emotional control, the charts stop feeling like chaos and start feeling like rhythm. That rhythm is what the professionals trade. And when you learn to hear it, you'll realize the market was never against you. It was only ever reflecting you. Chapter 3. The Law of Business Thinking. Trade like a CEO, not a gambler. If you treated your trading like a business, you'd stop gambling. Because businesses don't chase excitement, they chase consistency. They don't rely on luck. They rely on systems, structure, and data. Most traders don't fail because they're bad analysts. They fail because they run their trading like a hobby, not a company. A hobby costs money. A business makes money. So the question is, which one are you running? The trader versus the CEO. Let's start with a mindset shift. Imagine two traders. The first trader wakes up, checks the charts, and jumps into whatever looks good. No plan, no rules, just vibes. When the market moves in their favor, they feel like a genius. When it doesn't, they feel cursed. They trade on emotion, instinct, and impulse, and they call that experience. Now, the second trader is different. They wake up at the same time every day. They review yesterday's data before making a move. They have a written plan, a risk framework, and a review schedule. They think in quarters, not days. They treat every trade like a business decision, not a bet. Who do you think lasts longer? Who do you think grows capital instead of burning it? The answer is obvious. The second trader isn't just a trader. They're a CEO. And that's what this law is about. You are the CEO of your trading business. The moment you embrace that identity, everything changes. Trading is a business, not a bet. Every successful business has three things. 1, a plan. 2, a system. 3, an accountability. Yet most traders have none of those. They plan to get rich. Their system changes every week, and their accountability is feelings. If you ran a restaurant the way most people trade, you'd be bankrupt in a month. You'd keep changing your menu, guessing your prices, ignoring your costs, and blaming the customers when things go wrong. That's how emotional traders operate. They're not business owners, they're gamblers in disguise. The gambler's trap. Gamblers live in the moment. They think short term. They chase excitement, not process. But business owners? They think in systems. They optimize operations. They care about repeatable results. A gambler says, I hope this trade works. A CEO says, I know my edge works because I've tracked it. The difference is data. Gamblers trust feelings. CEOs trust numbers. Gamblers react to outcomes. CEOs respond to patterns. That's why 95% of traders lose. They're emotional employees of their own business instead of being the CEO of it. The CEO mindset. Here's what thinking like a trading CEO means. 1, you have a business model. Your strategy is your product. You know what you sell: consistent returns through structured risk. 2, you track your performance. Just like companies track profits, you track P&L, drawdowns, and risk exposure. 3, you reinvest profits. You don't spend your gains, you scale your edge. 4, you manage risk like cost control. A CEO doesn't overspend, a trader doesn't overleverage. 5, you review and improve. Every week you evaluate what worked and what didn't, not emotionally, but operationally. Rakian, the 3 divisions of your trading business. Think of your trading as having 3 departments. 1, operations department, execution. This is where you take trades. But execution is just the front desk of your business, not the entire company. Your job here is to follow systems with precision. No emotion, no improvisation. Ask yourself daily, did I follow my trading plan exactly? Did I deviate from rules? Why? Was my process efficient? This is where you build discipline through execution accountability. 2, finance department, risk capital management. This department manages your survival. It decides how much risk per trade, how to scale position sizes, and how to protect capital. Your risk per trade is like your cost per unit in business. If you overspend, you break the company. Set these metrics like a CFO. Risk per trade, never more than 1-2% of capital. Weekly drawdown limit, 5%. Monthly review threshold, stop trading and audit after consecutive losing weeks. Think of your capital as your inventory. You don't waste it. You deploy it intelligently. 3, research, development, learning, and adaptation. Every great business reinvests in innovation. For traders, that means studying data, backtesting, journaling, and adapting strategies. You should always be learning, not chasing new strategies, but refining your existing edge. Ask yourself weekly, what pattern worked best this week? What setups failed, and why? How did my emotions impact performance? R&D ensures your trading business evolves with the market, not against it. Data is your CFO. A professional trader doesn't guess how they're doing, they measure it. That's where your data tracking comes in, to track everything. Entry and exit price, or NOM, setup type, risk to reward ratio, outcome, profit, loss. Emotional state during trade. You don't need fancy software. A simple spreadsheet can build your trading empire. Why does this matter? Because data doesn't lie. Your emotions do. Your data is your CFO, cold, logical, and brutally honest. And it doesn't care how confident you felt about a trade. It just tells you what's profitable and what's not. That's what CEOs rely on: numbers, not narratives. The emotional profit-loss statement. Here's something most traders never think about. You have two types of profit and loss: financial and emotional. Financial P&L tells you how much money you made or lost. Emotional P&L tells you how you felt while making or losing it. If you made money but felt anxious, angry, or out of control, that's not profit. That's emotional debt. The goal is to build emotional cash flow, a steady state of calm, clarity, and confidence. Because the truth is, you can't scale chaos. If you're mentally unstable at $1,000 risk, you'll self-destruct at $10,000. That's why the emotional side of your trading business is just as important as the financial side. Your weekly CEO review system. Every CEO reviews performance regularly. So should you. Here's a simple but powerful weekly review system. 1. Results review. Total trades taken, win rate, average risk to reward ratio, total profit, loss, means. 2. Process review. Did I follow my trading plan 100%? What rules did I break? What emotions interfered? 3. Improvement goals. 1 technical improvement, 1 mindset improvement, 1 risk adjustment. Keep the system consistent. Because consistency breeds clarity, and clarity builds confidence. The monthly business meeting. Once a month, hold a business meeting with yourself. Yes, literally schedule it. Pull up your charts, your journal, and your P&L. Ask yourself the same questions a CEO asks their board. What worked this month? What didn't? What's my ROI? Am I managing costs, losses efficiently? What's my growth plan for next month? This practice does something powerful. It removes ego from trading. You're no longer saying, I'm a bad trader. You're saying the business needs optimization. That's how professionals think. Trade like a CFO, live like a CEO. Your trading account is your company's cash flow. Your trades are business expenses. Your risk management is your financial plan. And your strategy is your product line. Here's the equation every professional trader understands. Good strategy, bad business management, failure. Average strategy, great business management, success. Because the game isn't about perfection, it's about longevity. The trader who treats trading like a company can survive storms, recover from drawdowns, and compound profits year after year. The gambler, they blow up after every emotional hurricane. Systems create freedom. You might think, but systems sound boring. And you're right, they are. But they're also what make money. A trader without a system is a prisoner of impulse. A trader with a system is free. Because freedom doesn't come from doing what you want. It comes from building something that works when you don't. Your trading system should be like a franchise model. Predictable, repeatable, and scalable. And when you master it, you'll realize that discipline isn't restriction. It's automation of success. Turning discipline into your business partner. Discipline isn't motivation. Motivation fades. Discipline stays. Think of discipline as your silent business partner. It does the boring work that makes the company rich. Every time you follow your plan when you don't feel like it, discipline is investing equity in your business. Every time you journal, review, or skip a bad setup, discipline is building your brand reputation, your credibility with yourself. The longer you stay disciplined, the more your business compounds. The CEO routine. Here's a daily and weekly routine that'll turn you from a reactive trader into a calm business owner. Daily routine. 1. Morning market review, 15 minutes. Analyze conditions, plan entries, exits, visualize execution. 2. Trading session. Execute your system, log emotions. 3. Post-market reflection. Journal results, lessons, emotional state. Weekly routine. Review top 5 trades of the week. Identify one behavior to fix. Revisit your risk exposure. Set weekly process goals. This simple rhythm makes your trading business predictable, and predictability creates profit. The long game. Every real business builds wealth through compounding time and consistency. Trading is no different. If you want to trade for the next 20 years, not just the next 20 trades, you must build foundations. The CEOs who build empires aren't chasing one lucky quarter. They're building systems that last decades. And so should you. Final thoughts. The CEO within. You are not just a trader. You are the founder of your trading company. Your screen is your boardroom. Your mindset is your management team. Your habits are your employees. So manage them wisely. The goal is not to trade every day. It's to build a business that trades with or without your emotion. Once you start thinking like a CEO, you'll stop asking, how can I make money today? And start asking, how can I build a system that makes money forever? That's when you'll stop being a gambler and start being a professional. The market doesn't respect excitement. It respects structure. And when you bring structure to your trading, you'll stop chasing the next win and start running your trading like the profitable business it was always meant to be. Chapter 4. The Law of Process. Detach from outcomes. There's a simple truth every trader learns the hard way. The more you chase profits, the faster they run away. Because chasing profits is emotional. Following process is professional. If the market is your playground, your emotions are the bullies, and the only way to win is to stop playing their game. That's what this chapter is about: detachment, discipline, and the power of process. The outcome trap. Let's start with something honest. When you check your P&L after every trade, when your mood rises and falls with your results, when you celebrate one green day and curse the next red one, you're trapped in the outcome cycle. You're addicted to results, and the market knows it. Because every time you attach your self-worth to a single outcome, you hand control to chance. One random loss suddenly feels personal. One big win tricks you into thinking you're invincible. You stop following your plan, you start following your emotions. And that's how good traders go bad. The trader's version of stoicism. Stoicism teaches one of the most powerful truths in human history. Focus on what you can control, accept what you can't. Trading is stoicism in motion. You can't control the market. You can't control news events, algorithms, or whale orders. But you can control your preparation, your position size, your stop loss, your emotional response. That's all. And that's enough. The moment you accept that truth, you stop trading against the market and start trading with yourself. The psychology of outcome obsession. Why do traders obsess over outcomes? Because our brains crave certainty. The unknown makes us uncomfortable. When you risk money, your survival instincts activate. You start equating results with safety. Win. I'm safe. Lose. I'm in danger. But here's the paradox. The more emotionally attached you are to the result, the worse your decisions become. You enter too early, exit too late, chase losses, and break your rules, all because your identity is tied to being right. That's not trading, that's emotional gambling. And a process is your shield. So what's the antidote? Process. Process is what stands between you and chaos. It's the structure that protects you from emotional storms. A process-oriented trader doesn't ask, did I win or lose? They ask, did I follow my system perfectly? That's it. That's their scoreboard. Because they understand something amateurs don't, the process creates the profit. Focus on the process and results follow. Focus on results and the process breaks. The power of detachment. Detachment doesn't mean you stop caring. It means you stop clinging. When you detach from outcomes, you free yourself from the illusion of control. You stop needing the market to behave a certain way. You stop needing trades to work. You simply execute your plan and let probability do the rest. It's not indifference, it's mastery. The trader's formula for detachment. Here's a simple mental model I teach traders. Control, consistency, confidence, attachment, emotion, chaos. Control what you can. Be consistent with it. And confidence follows not from wins, but from trusting your process. Confidence built on wins is fragile. Confidence built on process is unshakable. Process-oriented trading systems. A process-oriented trader doesn't wake up thinking, I need to make money today. They think, I need to execute my edge perfectly today. Here's what that looks like in practice. 1. Pre-market process. Identify a plus setups only. Set alerts, mark key levels. Review your emotional state. 2. Execution process. Follow your entry triggers exactly. Respect your stop loss. Never move targets emotionally. 3. Post-market process. Journal results, not just numbers, but feelings. Review screenshots. Identify process deviations. Over time, this becomes your feedback loop, your self-correcting system. Because every time you review your process instead of your PL, you get smarter, calmer, and sharper. That's how professionals improve through feedback, not feelings, creating feedback loops that self-correct. Let's talk about feedback loops. A feedback loop is how you turn mistakes into growth. Here's the formula. 1. Action, you take a trade. 2. Reflection. You analyze whether you followed your plan. 3. Adjustment. You make one small improvement for next time. Do this every day, and you'll evolve faster than traders who just stare at their charts. Indeed, most traders don't fail because they can't learn. They fail because they don't reflect. They repeat the same emotional reactions over and over, expecting different results. Feedback loops break that cycle. They turn every trade, win or lose, into data. And data is power. Why focusing on outcomes causes sabotage? When you measure success only by profit, you create emotional pressure. That pressure leads to fear and greed. Fear makes you miss opportunities. Greed makes you overtrade them. It's a lose-lose scenario. Here's the irony. Until the traders who stop caring about money start making money. Because when you stop forcing results, you start executing with freedom. Freedom breeds clarity. Clarity breeds consistency. Consistency breeds profit. That's the real compounding formula, not just for money, but for mastery, building trust in your trading plan. Trust is built through repetition. When you follow your plan, even when it hurts, you send a message to your subconscious. I can rely on myself. That self-trust becomes your anchor. You no longer panic when trades go wrong because you know your process will bring you back. This is where consistency begins, not from changing systems, but from trusting one long enough to see its truth. A trading plan isn't just rules, it's your business agreement with yourself. Break it once, you weaken that contract. Follow it relentlessly, and your brain starts believing you're reliable. That belief, that inner trust, is what allows you to detach from outcomes. A tale of two traders. Let me give you two real-world examples. Trader A, the results addict. Every morning, he wakes up and checks yesterday's P&L before brushing his teeth. If he's up, he's euphoric. If he's down, he's furious. He changes his strategy every week, chasing the latest setup that promises quick returns. His emotions control his process. He's addicted to the dopamine of being right. And he wonders why consistency never comes. Trader B, the process. Devotee. He starts his day with a morning journal. He sets one goal, not to make money, but to follow his plan flawlessly. He measures progress by discipline, not dollars. He logs every trade. He studies his mistakes. He doesn't care if he's right, he cares if he's repeatable. Months pass. Trader B's results compound. Trader A's account implodes. The difference? Trader A worshipped outcomes. Trader B worshipped process. And the market rewards worship of the right kind, from results to routine. You'll often hear traders say, focus on the process, not the results. But what does that actually mean? It means creating a routine so strong that your results become inevitable. It means shifting your emotional energy from hoping to executing. Here's how that transition looks in mindset. I hope this trade works. I trust my system. I need to win today. I need to follow my plan today. I'll check my P&L after this. I'll review my process tonight. It's subtle, but it's the difference between chaos and control. Micro wins over macro outcomes. If you want to detach from outcomes, start celebrating micro wins. A micro win isn't a profitable trade, it's a disciplined one. You waited patiently for your setup. You followed your stop loss. You didn't overtrade after a loss. Each micro win rewires your brain. It teaches you that success isn't about luck, it's about control. When you stack enough micro wins, macro outcomes take care of themselves. The art of surrender. Here's the part most traders struggle with: surrender. Surrender doesn't mean quitting. It means letting go of what's not yours to control. You don't control market outcomes. You control preparation, risk, execution, review, that's it. The rest, that belongs to probability. You can't negotiate with randomness. You can only respect it. When you finally accept that truth, you stop fighting the market. You start flowing with it. And that's when trading stops feeling like combat and starts feeling like rhythm. Your daily process checklist. Here's a simple checklist that builds process thinking into your daily routine. Before market open, review your trading plan, identify a plus setups only. Write down an emotional state, 1-10 scale. Visualize execution. During market hours, follow rules exactly. Take screenshots of trades. Use the 10-second rule before reacting emotionally. After market close, review trades. Score your process, 0-10. Write one lesson to apply tomorrow. Do this for 21 days and watch how your brain starts craving process instead of profit. The peaceful trader. When you stop chasing results, something magical happens. Peace. You stop feeling desperate. You stop forcing trades. You stop needing to prove something to the market. You just trade. Calmly, consistently, confidently. That's the state every trader dreams of, but few realize it's not achieved through more knowledge. It's achieved through less attachment. The takeaway. Here's the core truth of the law of process. The market rewards consistency, not intensity. You don't win because you work harder. You win because you work steadier. When you stop obsessing over outcomes and start perfecting your process, you remove the emotional noise that clouds judgment. Every trade becomes a data point. Every loss becomes tuition, and every win becomes validation, not of your worth, but of your discipline. Trading mastery isn't built on results, it's built on repetition. On the quiet confidence that comes from doing the right thing, again and again, no matter what the market gives you. Detach from the outcome. Attach to the process. Because the process is your freedom, and once you fall in love with it, you'll realize that success was never something to chase. It was something you became. Chapter 5. The Law of Risk. Protect capital like a guardian. Every trader wants to grow their capital, but the great ones, they protect it first. Because in trading, survival always comes before success. You can't win tomorrow if you blow up today. You can't grow wealth if you can't defend it. This is the law of risk, the principle that separates the professional trader from the reckless gambler. The first truth: you are a risk manager, not a fortune teller. Most traders think they're in the prediction business. They spend hours trying to forecast the next candle, the next breakout, the next Fed move. But here's the truth. You're not a predictor. You're a risk manager. Your job isn't to know what will happen. Your job is to survive whatever happens. Read that again. Because once you internalize it, everything about the way you trade changes. You stop asking, will this trade win? You start asking, if this trade loses, will I still be standing? That shift from prediction to protection is the mindset that builds longevity. The psychology of risk and loss. Let's talk about how the mind reacts to loss. When you lose money, your brain lights up the same way it does when you feel physical pain. It's not metaphorical, it's literal. Your body releases cortisol, adrenaline, and fear chemicals that scream, avoid this at all costs. That's why so many traders move their stop loss, double down on losers, or refuse to close a bad position. They're not being stubborn, they're being human. Your brain isn't wired for probabilistic thinking. It's wired for survival. But trading flips survival logic upside down. In real life, running from danger keeps you alive. In trading, running from small losses kills you slowly. The pros understand this. They accept small losses like bodyguards taking light punches because they know it's better to take a jab than a knockout. The amateurs fight back emotionally and end up on the floor. Your real enemy, the need to be right. Every trader has a hidden addiction, the addiction to being right. It feels good when you nail a setup, when price hits your target perfectly. It feeds your ego. But ego and equity can't coexist for long because the market doesn't pay you for being right. It pays you for managing wrong. Let me say that again. The best traders in the world are experts at being wrong safely. They know their edge only needs to work over time. They accept that half of their trades might lose, and they build their systems to survive that reality. That's risk management, designing your process to stay profitable even when you're wrong. The 1% rule: small risk, big freedom. If you want a simple rule that could save your trading career, here it is. Never risk more than 1% of your capital on a single trade. It sounds boring, right? Too safe, too slow. But that 1% rule is what keeps you alive when the market goes crazy. Let's say your account is $10,000. 1% is $100. If you lose $100, your emotional capital stays intact. You can reset, refocus, and re-engage. But if you lose $1,000, 10%, you don't just lose money. You lose clarity. You start revenge trading, doubting your system, and spiraling emotionally. That's why professionals play defense first. They never bet the house, they protect the house. The irony? The smaller you risk, the longer you last. The longer you last, the more inevitable your profits become. Because longevity creates opportunity, and opportunity creates success. The asymmetric bet. Risk little, gain big. Every great trade has one thing in common: asymmetry. You risk a little to make a lot. That's what we call positive asymmetry, where your potential reward outweighs your potential loss. If you risk $1 to make $3, you only need to be right 33% of the time to break even. That's not gambling, that's intelligent risk. Think like a casino, not a customer. Casinos don't need to win every hand. They win because their odds, their asymmetry, are built into every play. You can do the same in trading. Your edge doesn't come from perfection. It comes from structure. Your system should make losing small and winning big inevitable over time. The risk versus reward mindset. Let's flip your focus. Most traders obsess over entries and indicators. Pros obsess over risk-reward ratios. Before they click buy or sell, they already know three numbers: the entry price, the stop loss, the target. They calculate whether the potential reward justifies the risk. If it doesn't, they walk away no emotion, no attachment, because they understand this truth. If the math doesn't make sense, the setup doesn't matter. You can have the best chart pattern in the world, but if your reward is equal to your risk, you're just flipping a coin. Professional traders look for asymmetric setups: 2, 1, 3, 1, even 5, 1 ratios. That means one good trade can cover multiple small losses. That's how consistency is built, not through perfect accuracy, but through mathematical advantage. Why cutting losses? Fast isn't weakness, it's wisdom. There's an old saying in trading: losers average losers. It means never add to a losing position out of hope. Cutting a loss is not weakness, it's strength. It's you saying, I value my capital more than my ego. Every big trading disaster, every account blown, every career ended started with one thing: refusal to cut a loss. Think about it. A 10% loss requires an 11% gain to recover. A 50% loss needs a 100% gain. Go. A 90% loss? You're done. That's why pros act fast. They don't argue with price, they respect it. Cutting losses quickly is like sealing a leak in your boat before it sinks. You don't wait to see if the water stops on its own. The emotional side of risk management. Let's talk emotions. When you risk small, you protect not just your capital, but your mind. A trader who risks too much is always in survival mode. Every tick feels like a threat. Every red candle feels personal. They stop analyzing rationally and start reacting emotionally. But when you know that one trade can't hurt you, you relax. You think clearer. You make better decisions. Risk management isn't about math, it's about peace of mind. The less you fear loss, the more freely you can trade. The risk pyramid. Here's how professionals structure their risk like a pyramid. Reward level 1. Account risk. How much of your total portfolio you'll risk per trade? Usually 0.5%, 1%. Level 2. Trade risk. The difference between your entry and stop loss. That determines your position size. Level 3. Daily risk limit. How much you're willing to lose in a day before you stop trading. Usually 2%, 3%. Level 4. Maximum. Drawdown. The total loss you'll tolerate before stepping away to reassess. Maybe 10%, 15%. This structure keeps emotions contained because you know your worst-case scenario before you start. And when risk has boundaries, fear loses power. Protect before you profit. The long-term game. Here's the irony most traders miss. The ones obsessed with growing fast usually burn out fast. The ones focused on protecting grow fastest in the long run. Because protection creates consistency, and consistency compounds. Think of your capital as your soldier in battle. Would you send your last soldier to war without armor? Would you risk your entire army on one fight? Of course not. You'd protect them. Because without soldiers, you can't win the war. Your capital is your army. Guard it like a general who plans to fight for decades. That's how wealth is built, not by winning one great battle, but by surviving 1,000 small ones. The power of compounding safety. Let's play a little thought experiment. Trader A risks 10% per trade. Trader B risks 1%. Both have a 50% win rate with 1 reward to risk. Who wins? At first, Trader A grows faster. His wins look massive. But when the losing streak hits, and it always does, he's wiped out. Trader B? He takes hits, sure, but his account barely flinches. He's still standing, still learning, still compounding. And over months, his steady curve beats the roller coaster every time. Because compounding doesn't work without capital preservation. The first rule of compounding is simple. Don't lose big, ever. Building your risk framework. Here's a practical framework you can start using tomorrow. 1. Define your account risk, 1%. Decide the maximum percentage of your account you'll risk per trade. This is your anchor. 2. Calculate position size. Use the position size calculator. For example, if your stop is 50 pips and your risk is $100, your lot size adjusts to fit that. Case 3. Set a daily stop. Once you hit your loss limit for the day, stop trading. Tomorrow will bring new setups, but emotional recovery takes time. 4. Review risk deviations. Every week, review if you violated any rule. If you did, ask why. Emotional pattern, market noise, lack of clarity. That review transforms your risk rules from theory into identity, turning risk rules into habits. Risk management only works when it's automatic. You shouldn't have to think, should I size down? You should just do it. That's habit power. How do you build it? Repetition and reflection. Every day you follow your risk rules, you strengthen your internal discipline muscle. Every time you break one, you weaken your trading identity. So treat every trade as a test, not of your analysis, but of your character. Ask yourself before every entry, if this goes wrong, am I okay? If the answer isn't a confident yes, reduce your risk or walk away. Risk in the long game. When you zoom out, trading is not a sprint, it's a lifetime marathon. You'll go through market cycles, bull runs, crashes, and chaos. Your strategies will evolve, but your survival principles must stay sacred. Think like Warren Buffett, not a meme trader. He doesn't aim to win fast. He aims to never lose permanently. That's the mindset you want, because the longer you're in the game, the higher your odds of winning become. The trader who lasts always wins. Your daily risk commandments. Let's make this simple. Your personal risk guardian code. 1. Never risk more than 1% on a trade. 2. Never move your stop loss out of fear. 3. Never add to losing trades. 4. Always know your maximum loss before entry. 5. Always live to trade another day. Print it. Read it every morning. Turn it into a ritual. Because discipline isn't built by motivation, it's built by repetition. Closing, the guardian within. You are not just a trader. You are a guardian of your capital, your discipline, and your future. Every dollar in your account represents a possibility. Every trade is a test of how well you protect that possibility. Don't chase glory. Don't chase validation. Chase longevity. Because in this game, the goal isn't to look smart, it's to stay alive long enough to get rich slowly. Protect first, profit later. That's the law of risk, and the market will always bow to those who respect it. Your first responsibility as a trader is not to grow capital, it's to defend it. Guard it with logic. Defend it with discipline. And remember, the longer you survive, the more the market rewards your patience. That's how traders become legends. Not by risking it all, but by protecting it all. Chapter 6, The Law of Discipline. The Habit of Consistency. Every trader wants success. Every trader wants freedom. But few are willing to do what success actually demands. Discipline. Discipline isn't exciting. It's not glamorous. It's quiet, repetitive, and often boring. But in that boredom lies greatness. Because in trading, just like in life, you don't rise to your goals. You fall to your systems. And your systems are only as strong as your discipline. The myth of motivation. Let's start with a hard truth. Motivation is temporary. It's easy to feel fired up after a win or after watching a motivational video at 2 a.m. But motivation fades the moment things get uncomfortable. And trading is always uncomfortable. One bad trade, one red week, and motivation evaporates like mist. That's when most traders quit. But the disciplined trader? They don't rely on motivation. They rely on structure. They don't need to feel good to do what's required. They do it because it's required. That's the essence of discipline. Doing what must be done, especially when you don't feel like doing it. Turning routines into rituals. Let's talk about habits, or more specifically, rituals. A routine is something you do. A ritual is something you honor. Most traders treat their pre-market prep like a checklist. Professionals treat it like a sacred ceremony. They wake up at the same time. They review their plan, their setups, their mental state. They don't rush. They don't improvise. Because they know if their mind isn't ready, their money isn't either. You see, a ritual doesn't just prepare your charts, it prepares you. It tells your brain, this is what we do, this is who we are. And the more consistent that ritual becomes, the stronger your trading identity grows. It's not about being perfect. It's about showing up every single day with intention. Aninu, the science of habit, loops in trading. Now let's get practical. Every habit, good or bad, follows the same formula. Cue, routine, reward. Cue, the trigger that starts the behavior. Routine, the action you take. Reward, the feeling or outcome that reinforces it. For example, you feel bored. Cue, you open a chart and force a trade. Routine, you feel excitement. Reward. That's a bad habit loop, one that leads to impulsive trading. To rewire it, you need to replace the routine, not remove it. So instead, you feel bored. Cue, you open your trading journal and review past trades. Routine, you feel clarity and growth. Reward. Same cue, better outcome. That's how discipline is built, not by fighting impulses, but by reprogramming them. You don't remove bad habits. You overwrite them with better ones. How habits create identity. Every action you take is a vote for the person you're becoming. When you journal after every session, you cast a vote for being a conscious trader. When you follow your stop loss, you cast a vote for being a disciplined trader. When you skip over trading because your plan says no setup, you cast a vote for being a professional. One vote doesn't change your identity, but thousands of votes compound over time. Soon you no longer try to be disciplined. You simply are. Discipline isn't something you do. It's something you become. Journaling. Your accountability mirror. Here's one of the most powerful discipline tools in existence. The trading journal. Not a fancy spreadsheet. Not a performance tracker. A mirror. Because journaling shows you the truth, not about the market, but about yourself. It exposes your emotional triggers, your decision patterns, your blind spots. Most traders avoid journaling because it feels like homework. But the pros crave it because it's where the real learning happens. Here's what to include in your daily journal. 1. Trade details, entry, exit, risk, reward. 2. Reason for entry, why you took it, setup, confirmation, edge. 3. Emotional state, how you felt before, during, and after. 4. Process. Score, did you follow your plan? Yes or no? 5. Lesson learned, what you'll do differently tomorrow. This habit transforms chaos into clarity. Because when you start to see your behavior in writing, you start to own it. And what you own, you can control. That's how journaling builds discipline, through daily accountability. The boredom barrier. Now let's talk about one of the most underrated killers of discipline, boredom. Trading isn't always exciting. In fact, most of the time it's painfully repetitive. Same charts, same setups, same waiting. And that's where most traders self-destruct. Not because of fear or greed, but because they can't handle boredom. They crave stimulation. They want action. So they start forcing trades just to feel something. But discipline thrives in boredom. Discipline says, I'd rather be bored and consistent than excited and broke. That's the mindset of mastery. Because mastery isn't glamorous. It's routine. It's repetition. It's finding beauty in the monotony of doing the right thing again and again. If you can master boredom, you can master trading. The danger of emotional whiplash. Without discipline, trading becomes an emotional roller coaster. Up on wins, down on losses. Confidence today, doubt tomorrow. That inconsistency destroys focus. Discipline flattens that emotional curve. It keeps you steady when the market isn't. Because when your process becomes mechanical, your emotions lose power. You no longer depend on external validation. Your self-worth doesn't swing with your equity curve. You find peace in consistency. And that peace, that emotional stability, is what separates traders who last from those who burn out. The power of consistency over intensity. Discipline isn't about doing more. It's about doing enough every day. Most traders start with intensity. They binge-watch strategy videos, trade for 12 hours straight, and burn out by Friday. But consistency beats intensity every single time. One well-executed plan a day for 300 days outperforms 10 random trades made in one manic session. Intensity is emotional. Consistency is sustainable. And intensity burns energy. Consistency builds momentum. You don't need massive effort. You need repeated effort. Even the smallest discipline, repeated long enough, creates exponential results. Because success doesn't come from occasional greatness. It comes from consistent good habits. How to build discipline from the ground up. Here's a framework, a blueprint to systemize your discipline. Define your non-negotiables. Decide the 3-5 rules you will never break. Example: never trade without stop loss, always journal after session, only trade A+ setups. Create a daily routine. Build a morning ritual and an evening review ritual. Stick to them even on bad days. Use visual cues. Sticky notes, whiteboards, reminders, anything that anchors your behavior. Your brain loves cues. Give it visual anchors. Track process, not profit. Score yourself daily on how well you followed your system, not how much you earned. Reward discipline. Celebrate every day you stuck to your plan, even if it was a red day. You're training your brain to value process over outcome. When discipline becomes your default mode, trading becomes effortless, not easy, but effortless. Because effort becomes part of who you are. Dealing with discipline. Fatigue. Even the best traders get tired of structure. There will be days when you want to skip journaling, when you want to break a rule just once. That's normal. But here's the trick. Design your system to protect you from yourself. Automate as much as possible. Use alerts to remind you of key levels. Use stop losses that lock in automatically. Use journaling templates to make reflection frictionless. Discipline is easier when you remove friction. And when fatigue hits, don't push harder, rest smarter. Step away, reset, recharge. Discipline doesn't mean obsession. It means consistency over time. Rituals of elite traders. Let's peek behind the curtain. Here's what most elite traders have in common: their discipline rituals. They meditate or visualize before trading. To quiet emotions and sharpen focus. They journal religiously. Because they know self-awareness compounds. They have trading hours and they stop when the bell rings. No revenge trading, no FOMO. They plan their week on Sunday. Not to predict, but to prepare. Asterisk, asterisk. They review not just charts, but character. Where did I break discipline this week? They treat trading as a professional craft, not a hustle. And over time, those micro-disciplines stack into massive results. The boring edge. Here's something most traders will never understand. The edge isn't in your setup. It's in your discipline to execute it the same way, every time. The average trader searches for new indicators every month. The professional sharpens one edge for years. Discipline is the edge. If you follow your process 100 times and the math works, you win. If you break it half the time, you destroy your own probabilities. That's how powerful discipline is. It doesn't just improve results, it creates them. The identity of a disciplined trader. Discipline isn't a skill you acquire, it's an identity you live. When you say, "I am a disciplined trader," you start acting like one automatically. Your decisions align with that identity. Your habits reinforce it. It's no longer about willpower, it's about self-image. Ask yourself, who do I want to become? A reactive trader, ruled by impulse, or a consistent trader, ruled by process? Every decision you make answers that question. And over time, those small answers build your identity, brick by brick. Consistency is your superpower. Discipline and consistency are inseparable. You can't have one without the other. Every consistent trader is disciplined. Every inconsistent trader lacks it. When you become consistent, you gain a superpower, or predictability. You know what to expect from yourself. And that creates trust not just in your system, but in you. The market stops feeling random. Your emotions stop controlling you. You become steady, grounded, confident. That's real power, not the kind that comes from adrenaline, but the kind that comes from peace. Your daily discipline ritual. Here's a simple checklist to anchor your daily routine. Morning. Wake up at a consistent time. Review trading plan and setups. Journal emotional readiness. Visualize ideal trading behavior. During trading hours, follow entry and exit rules. Use the 10-second rule before reacting emotionally. Take screenshots for post-trade review. After trading, log all trades and emotions. Score your discipline, 1 to 10. Write one lesson or improvement. Follow this for 30 days. You'll start noticing something powerful. Discipline becomes autopilot. It's no longer something you force, it's something you are. Closing, the rhythm of mastery. Discipline is the heartbeat of mastery. It's not loud. It's not flashy. It's steady. While others chase excitement, you build excellence. While others react to emotions, you respond to process. You no longer trade to feel alive. You trade because you are aligned. That's the law of discipline. It's not about perfection, it's about repetition. It's not about speed, it's about rhythm. Because in the long run, the trader who stays consistent beats the one who stays motivated. Every single time. Discipline is doing what needs to be done, especially when you don't feel like doing it. Build your rituals. Honor your process. Become the kind of trader whose consistency is their edge and whose discipline is their identity. Chapter 7. The Law of Self-Awareness. Know your weaknesses better than the market does. Every trader studies charts. Every trader studies patterns. But very few study the person pressing the buttons. You can memorize every setup. You can backtest every system. But if you don't understand yourself, your emotions, your impulses, your hidden biases, then the market will expose them for you. Because the market is a mirror. It reflects not your knowledge, but your nature. And the truth is simple. You don't trade the market, you trade yourself. The hardest chart you'll ever study. There's one chart no one talks about. It's not on your platform. It has no indicators. It's the chart of your own behavior. Every spike in emotion, every drawdown in discipline, every breakout of impulsiveness, it's all there in the chart of your psychology. The traders who last the longest aren't the ones who predict price best. They're the ones who predict themselves. They know when they're likely to chase. They know when they're vulnerable to overtrading. They know their emotional cycles as well as they know price cycles. And that self-awareness becomes their greatest edge. Because in trading, you don't need to control the market. You just need to stop yourself from being your own worst enemy. The 3 layers of self-awareness. Let's break it down. Self-awareness in trading has 3 levels. 1. Surface awareness. Knowing what you're doing. I took a revenge trade. 2. Emotional awareness. Knowing why you did it, I felt frustrated after missing a setup. 3. Identity awareness. Knowing who you're becoming. I'm repeating a pattern that's rooted in fear. Most traders never move past the surface. They analyze their actions without analyzing their drivers. But the real power lies in the second and third layers. That's where you stop reacting and start evolving. Because every losing streak, every mistake, every emotional decision isn't just a problem to fix. It's a signal to understand. Your trading archetype. Which one are you? Every trader falls into certain patterns, what I call trading archetypes. Each archetype has strengths and fatal weaknesses. Your job isn't to eliminate your type, it's to understand it. Let's meet a few. 1. The overthinker. The overthinker wants certainty. They crave perfect confirmation before taking a trade. They analyze, hesitate, and second-guess until opportunity slips away. Their biggest fear? Being wrong. Their lesson? Accept that uncertainty is the price of participation. Trading is not about being right, it's about managing risk. If you wait for perfect certainty, you'll miss imperfect opportunity. 2. The impulsive trader. This trader feels before they think. They chase green candles. They enter because it looks good. They exit because it feels bad. They're addicted to the rush. Their biggest weakness? They equate activity with progress. Their lesson? Slow down. Structure creates freedom. Patience feels like punishment, but it's actually protection. 3. The perfectionist. The perfectionist wants flawless execution. They beat themselves up over small losses. They can't forgive mistakes. They seek total control in a chaotic system. Their biggest flaw? They equate mistakes with failure. Their lesson? Trading isn't about being perfect. It's about being profitable. Progress, not perfection, is the real game. Imperfection is inevitable. Consistency is optional. Choose consistency. 4. The overconfident trader. The overconfident trader wins big once and suddenly believes they've figured it out. They increase size, ignore stops, and mistake luck for skill. The market eventually humbles them. Their biggest weakness? Ego disguised as conviction. Their lesson? Confidence is earned through consistency, not outcomes. Humility isn't weakness, it's insurance. In trading, arrogance costs more than ignorance. 5. The fearful trader. This trader hesitates at every signal. They've been burned before. They cut winners too early and let losers run because pain shapes their perception. Their biggest weakness? Avoidance of pain at all costs. Their lesson? Risk is not the enemy. Avoiding it blindly is. The goal isn't to avoid fear, it's to act despite it. Recognizing your archetype is the first step to mastery. But the second step is even more powerful. Understanding how your personality influences your performance. Because your trading plan means nothing if it doesn't fit who you are. The psychology of overconfidence and self-sabotage. Let's talk about the most dangerous trap in trading: self-sabotage. You've seen it before. You're up for the week. Confidence is high. And suddenly, you give it all back in one impulsive trade. Why? Because the brain hates balance. When you feel too good, you unconsciously seek to reset. It's a form of emotional equilibrium. Your subconscious trying to restore its comfort zone. If your identity doesn't match your success level, you'll subconsciously sabotage it to return to normal. That's why you see traders who can't hold on to profits, not because their system is broken, but because their self-image is. They don't feel deserving of consistency. Until you believe you're worthy of success, you'll keep unconsciously pushing it away. Self-awareness exposes that hidden wiring. It brings your blind spots into the light. And once you can see the pattern, you can change it. The mirror exercise. Seeing your true self. Here's a powerful self-awareness tool, the mirror exercise. At the end of each trading day, stand in front of a mirror. Look yourself in the eye and ask, 1. Did I trade my plan or my emotions? 2. What emotion drove my biggest decision today? 3. What pattern am I repeating that I already know hurts me? Don't judge, just observe. Awareness isn't about blame, it's about truth. The more honest you are in that reflection, the faster your growth will accelerate. Because every unexamined behavior will eventually cost you money. But every examined behavior will eventually make you stronger. Journaling for self-discovery. We talked earlier about journaling as a performance tool. Now let's talk about it as a mirror of the mind. Self-awareness grows through reflection, and reflection grows through writing. When you write, not type, but write, you slow your thoughts enough to actually see them. Here's how to use journaling for self-awareness. 1. Emotion. Journal. Note your emotional states during trading sessions. Fear, greed, impatience, boredom. Look for patterns across the week. 2. Trigger tracker. Identify what triggers your impulses. Missed trade, social media, lost streak. Awareness of triggers weakens their control. And 3. Belief audit. Write down what you believe about trading and money. I need to win often to succeed. Then challenge each belief. Is it true, useful, or outdated? 4. The self-dialogue. End each week by writing a conversation between you now and your future disciplined self. Let the future version of you give advice. This isn't just journaling, it's mental training. Because when you write, you're literally reprogramming your subconscious dialogue. The market doesn't punish you. It reveals you. Here's something most traders never understand. The market isn't against you. It's exposing you. When you overtrade, it's showing your impatience. When you chase, it's showing your insecurity. When you break rules, it's showing your lack of trust in your process. The market is the world's most honest feedback mechanism. It doesn't care who you are. It just reflects what you bring. If you bring ego, it humbles you. If you bring discipline, it rewards you. If you bring chaos, it mirrors chaos. That's why every losing streak is an invitation, not to change your strategy, but to examine yourself. How to turn weakness into strategic advantage. Here's the paradox. Your greatest trading edge might come from your greatest weakness, because self-awareness allows you to leverage it. If you're impatient, specialize in short-term scalping with tight risk rules. If you're risk-averse, focus on swing trades with clear confirmations. If you're emotional, build automation or alerts that limit discretion. If you're data-driven, use your strength-built systems. Test, refine. Don't fight your nature, optimize it. Design your trading style to fit your psychology, not the other way around. That's how professionals operate. They don't try to change who they are overnight. They align their trading with who they are. That's the ultimate form of self-awareness, trading in harmony with yourself. The self-awareness loop. Here's a simple formula to keep evolving. 1. Notice your patterns. 2. Name the emotion or bias. 3. Neutralize it through structure. 4. Nurture new behavior with repetition. Notice, name, neutralize, nurture. That's how awareness turns into transformation. Because awareness without action is just insight. But awareness with action becomes growth. The inner compass. When you truly know yourself, your temperament, your biases, your energy cycles, you develop an internal compass that no indicator can match. You start to feel when you're trading off-center. You sense when ego is creeping in. You can pause mid-trade and say, wait, this isn't me trading, this is my emotion trading. That moment of awareness changes everything. It's like hitting a pause button on your impulses. It gives you back control. And in trading, control isn't about controlling the market, it's about controlling your response to it. Self-awareness builds self-trust. Every time you observe a pattern and correct it, you build trust with yourself. And self-trust is the foundation of trading confidence. When you can rely on your discipline, not your emotions, you stop second-guessing every decision. That inner trust is what keeps professionals calm under chaos. Because they're not trying to control the outcome, they're anchored in who they are. Self-awareness leads to self-trust. Self-trust leads to emotional control. Emotional control leads to consistent execution. That's the chain of mastery. Closing. The mirror never lies. The deeper you look into the market, the more you realize it's just reflecting you. Your beliefs, your fears, your habits, your hidden stories about success, money, and worth. The market doesn't lie. The mirror never lies. So look into it often. Don't ask, what's the market doing? Ask, what am I doing? Don't ask, when will I win? Ask, who must I become to win consistently? That's the essence of this law, the law of self-awareness. Because when you know your weaknesses better than the market does, you take away its power to exploit them. You stop being reactive and start being reflective. You stop trading noise and start trading truth. And that truth is your ultimate edge. Mastering the market begins with mastering yourself. The charts change every day. But you are the constant. Learn that chart first. Chapter 8. The Law of Patience. Thinking in years, not days. In the world of trading, everything screams now. The flashing charts, the breaking news, the endless notifications all whispering the same lie. If you don't act fast, you'll miss it. But the truth? Real traders don't chase time. They own it. Because patience isn't passive, it's power. It's the invisible edge that separates amateurs who need a trade from professionals who wait for one. And if you truly want to win this game, you must stop thinking in days and start thinking in years. The illusion of speed. We live in a culture addicted to speed. Fast money, fast results, fast gratification. Everywhere you look, someone is showing you screenshots. $5,000 in one day, 100% return overnight. It's intoxicating. You start to feel like if you're not making money fast, you're falling behind. But speed kills consistency, and impatience kills traders. Because the truth is simple. The faster you try to grow, the faster you'll blow up. Professionals understand something amateurs don't. Slow is smooth and smooth is fast. They build one brick at a time, knowing that steady progress compounds into unstoppable momentum. The myth of overnight success. Every overnight success in trading was built on years of invisible work. The chart you see on Instagram, that perfect entry, that huge win, isn't the whole story. You didn't see the years of losing, the nights of doubt, the journals full of mistakes, the accounts blown, rebuilt, and refined. Behind every disciplined trader is a graveyard of old versions of themselves. And patience is what helped them evolve. The myth of overnight success is dangerous because it breeds comparison. You start to measure your chapter 1 against someone else's chapter 20. And when you do that, you sabotage your own timeline. Patience says, run your own race. You're not behind, you're just early. The compounding power of consistency. Patience and consistency are twins. You can't have one without the other, because consistency without patience burns out. And patience without consistency stagnates. Together they create compound growth. Let's put it this way. If you improve your trading discipline by just 1% each week, you're not 52% better after a year. You're 68% better. Because progress compounds. Small improvements done daily become massive transformations over time. That's the real secret of trading mastery. Not intensity, but longevity. Anyone can trade well for a week. Few can stay consistent for years. That's why the pros don't measure success by daily P&L. They measure it by one thing. Am I still in the game? Because if you can stay in the game long enough, The market eventually pays you for your patience. Why patience builds capital and confidence. Let's talk about two kinds of capital: financial capital and psychological capital. Impatient traders burn both. They risk too much, too fast. They get emotional, then hesitant. They swing between overconfidence and despair. Every time they break discipline, they withdraw from their mental account. But patient traders, they compound both. They take smaller, smarter trades. They recover faster from losses. They stay emotionally balanced because they're not chasing outcomes. Patience builds capital because it protects you from unnecessary losses. It builds confidence because it proves you can control yourself. Confidence isn't built from winning trades. It's built from waiting through the ones you didn't take. Every time you resist an impulse, you strengthen your self-trust. And that trust becomes your trading backbone. How professionals wait for a plus. Setups. Amateurs trade to feel involved. Professionals trade to make money. That's why pros don't take many trades. They take quality ones. They understand that in the long run, the money doesn't go to the trader who trades the most. It goes to the trader who waits the best. Here's what separates them. 1. Predefined edge. They know exactly what qualifies as a valid setup. If it's not an A+ setup, it's not even on their radar. 2. Structured patience. They schedule observation days with no trades. Because patience isn't about doing nothing. It's about watching with purpose. 3. Probabilistic thinking. They don't need every trade to win. They just need to execute with consistency. 4. Emotional detachment. Missing a move doesn't bother them. They'd rather miss an opportunity than take a bad one. They wait for the market to come to their level, not the other way around. Because patience isn't weakness. It's a form of quiet strength. The long game mindset of professionals. Imagine two traders start at the same time. Both deposit $10,000. Trader A doubles their account in a month and then loses it all the next. Trader B grows 5% a month consistently. At the end of the first year, Trader A is broke. Trader B has $17,000. Not impressive until year 5. Because by then, Trader B's $10,000 has quietly compounded into $127,000. That's the long game. It's not sexy. It's not viral. It's sustainable. Professionals think in years, not days. They don't care about this week's trade. They care about this decade's equity curve. They know that small, steady growth builds massive results, not through luck, but through the law of compounding discipline. The patience curve. There's a hidden curve. Every trader must face the patience curve. At the start, patience feels like pain. You wait and wait, watching others get rich faster. You feel left behind. Then something shifts. You start seeing the benefits. Fewer losses, cleaner trades, calmer mind. You start to trust the process. And eventually, patience transforms from pain into power. You realize that waiting is not the absence of action. It's the highest form of action. Because you're conserving energy, protecting capital, and aligning yourself with the rhythm of the market. That's when patience becomes your secret weapon. The 3 dimensions of patience. There are 3 kinds of patience in trading and mastering. All 3 is the key. 1. Patience before the trade, waiting for confirmation. For the setup that matches your plan, not your impulse. This kind of patience is about discipline. 2. Patience during the trade, holding through drawdown. Trusting your stop loss. Resisting the urge to close early. This kind of patience is about emotional control. 3. Patience beyond the trade, allowing your process to play out over weeks and months. Not judging your system by short-term results. This kind of patience is about faith. Faith in your edge. Faith in your growth. Faith in time. When you master all 3, you become untouchable because nothing can rush you anymore. How hedge fund traders think in years, Let's zoom out to the top of the food chain: hedge funds. Do you think they care about today's move or this week's volatility? No. They're thinking in quarters, in years, in decades. They allocate risk based on cycles, not emotions. They study macro themes, not random candlesticks. They plan exits before they even enter. Most importantly, they're patient with data. They understand that no single trade defines success. It's the aggregate behavior that matters. They know patience creates statistical edge. And when you have patience, time itself becomes your ally. That's how they win, not by predicting every move, but by outlasting those who can't, trading the long game, building the investor mindset. Even if you're a day trader, you need to think like an investor, because the investor mindset values compounding over excitement. Here's how to apply it. Think in seasons, not sessions. Review your performance quarterly, not daily. Measure process. OI. Ask, is my discipline improving? Not just, is my balance growing? Invest in skill before scale. Don't chase big size until your small size proves consistent. Let time validate your edge. A strategy that survives for years will outlast every hype method. Trading isn't about speed, it's about survival. And survival rewards the patient. The patience paradox. Here's the paradox. The more patient you become, the faster your results come. Because patience prevents losses, and preventing losses accelerates growth. Patience lets your edge play out. It keeps you from self-sabotage. It gives your brain time to see patterns clearly. So while others are busy chasing, you're quietly compounding. It looks slow until it's unstoppable. Patience is emotional strength. Let's make this personal. Patience is not just a skill, it's emotional maturity. It means you can handle not knowing. You can handle waiting. Or you can handle uncertainty without acting impulsively. That level of control isn't natural, it's trained. You train it every time you don't take a mediocre setup. Every time you let a winner run instead of grabbing quick profits. Every time you say, not today, my setup isn't ready. That's strength. Because patience isn't weakness. It's confidence in disguise. When you're truly confident in your edge, you have no need to rush. Practical exercises to build patience. 1. The no trade day, practice. Pick one day a week where you don't trade even if a setup appears. Use that day to journal, review, and study. It teaches your brain that waiting can be productive. 2. Delayed gratification. Training. When tempted to take quick profits, ask yourself, am I trading my emotions or my plan? Wait one more candle. Watch, learn, train that pause muscle. 3. The long-term vision board. Create a visual board for your 5-year trading vision. Not just profits, habits, lifestyle, discipline, freedom. Look at it weekly. It keeps your focus long-term. Patience grows when your vision grows. Because when your eyes are on the horizon, you stop tripping over the small stuff. The confidence of time. Think about this. The best investors, Buffett, Soros, Dalio, aren't just masters of money. They're masters of time. They know that wealth isn't created from doing more. It's created from doing less, better, longer. Patience is what lets your plan mature, your strategy evolve, your identity solidify. It's what turns chaos into clarity and volatility into opportunity. The longer your time horizon, the calmer your emotions. Because the longer you zoom out, the smaller every mistake appears. Time gives you perspective. Patience gives you power. Closing the timeless trader. Every tick of the market is a test of patience. Every candle says, can you wait? Every setup whispers, can you trust time? The impatient trader chases and burns. The patient trader waits and earns. This law isn't about charts. It's about character. Because patience isn't what you do, it's who you become. You become someone who doesn't panic when others do. Someone who holds conviction when others fold. someone who's focused on years, not days. That's the kind of trader time rewards, because the market always bends toward patience. The question is, will you? The market pays the patient. Time is your ally. Think in years, not days, and your future self will thank you. Chapter 9. The Law of Adaptability. Evolve or get eliminated. The market never stops changing. It breathes, it moves, it evolves. 1 month, momentum works like magic. The next, it destroys accounts. 1 year, trends are smooth. The next, everything chops sideways. And while most traders blame bad conditions, the truth is simpler: they failed to evolve. Because in the market's ecosystem, adaptability isn't optional. It's survival. The market is a living organism. Think of the market as a living, breathing organism. Complex, unpredictable, ever-changing. It doesn't care about your strategy. It doesn't care about your ego. It doesn't care what worked last time. Like nature, it rewards only those who adapt. You can't impose your will on it. You can only align with it. The greatest traders are not fortune tellers. They are observers. They listen before they act. They adapt before they react. And that's why they survive when others vanish. The danger of rigid thinking. Rigid thinking is the silent killer of traders. It sounds like this. This setup always works. The market is wrong, not me. I just need to double down. That's the ego talking. And ego doesn't adapt. When you get attached to a single idea, a single method, a single pattern, you blind yourself to reality. Because what worked last year may not work this year. The volatility changes. The participants change. The liquidity changes. Everything changes. But the rigid trader stays still. They cling to comfort while the world moves on. And like every creature that refuses to evolve, they get eliminated. Adaptability. The trader's superpower. Adaptability doesn't mean constantly changing strategies. It means adjusting your perspective. It's the ability to read context, recognize change, and respond with clarity, not emotion. It's not about abandoning your plan. It's about refining your edge. Every great trader has this superpower. They're like water, shapeless, formless, adaptable. When the market flows fast, they surf the momentum. When it slows, they sit still. When volatility spikes, they reduce risk. When opportunity returns, they scale up. They don't resist the tide, they ride it. Because adaptability isn't reaction, it's evolution in motion. Recognizing when your edge is fading. Here's a truth most traders ignore. Every edge has an expiration date. Markets evolve faster than your comfort zone. What gave you profits last quarter might drain you this one. So how do you know when your edge is fading? 1. Your win rate drops without explanation. The same setups stop behaving the same way. 2. Market volatility changes. Your stop losses that used to hold now get wicked out. 3. Liquidity shifts. Your entries and exits start slipping, spreads widen, fills delay. 4. Emotional friction increases. You start feeling frustrated, impatient, confused. That's your intuition whispering. Something's changed. The worst mistake you can make is trying to force an old edge to work. That's like trying to trade a storm using last week's weather report. The pros don't fight change. They study it. They learn its rhythm. Then they retool their playbook. Continuous learning and skill adaptation. Adaptability begins with humility. The willingness to say, I don't know everything. Because in the markets, what you know today can become obsolete tomorrow. That's why elite traders are lifelong learners. They don't just trade, they study trading. They read market history. They test new tools. They review their journals weekly. They stay curious, not complacent. Continuous learning is your insurance policy against extinction. It's how you spot evolving trends early. It's how you pivot when others panic. It's how you stay one step ahead. The moment you stop learning, the market stops rewarding you. The concept of adaptive confidence. Confidence is crucial in trading, but adaptive confidence is what keeps you alive. Regular confidence says, I'm right. Adaptive confidence says, I'll adjust if I'm wrong. One is ego-driven. The other is data-driven. The adaptive trader trusts themselves, but not blindly. They test, verify, evolve. They don't need to be right all the time. They just need to be ready all the time. That's adaptive confidence, the kind built on flexibility, not certainty. It's not fragile. It bends but never breaks. Resilience during uncertainty. Let's be honest. Uncertainty is the only constant in this game. But adaptability transforms uncertainty into opportunity. When the market feels chaotic, most traders freeze. They try to control the uncontrollable. They resist. But resilient traders flow. They adjust their size, change their time frames, adapt their expectations. They understand that uncertainty isn't danger. It's data. Every spike, every fake out, every pattern break is a message. Adaptable traders don't fear uncertainty. They listen to it. Because every chaotic moment hides a clue. And those who can adapt fastest find those clues first. Case study. The evolution of a trader. Let's tell a story. Meet Jake, a breakout trader who crushed it in trending markets. For 2 years, he printed money on clean breakouts. Then 2022 hit. Suddenly, the market went sideways. Every breakout failed. Every setup reversed. Jake blamed the market. Then he blamed himself. Then he did something few traders ever do. He adapted. He stopped forcing trends. He studied range-bound systems. He learned mean reversion. He cut his size, experimented, tracked results. By the next quarter, he wasn't just surviving, he was thriving. His old strategy stopped working, but his adaptability built a new one. Jake didn't lose his edge. He evolved it. That's the lesson. Markets reward the trader who can reinvent themselves without losing discipline. The 3 pillars of adaptability. To stay relevant, you must build your adaptability on 3 pillars. 1. Observation. Watch without bias. Study what is, not what you want it to be. Detach your ego and analyze raw data. Ask, what's the market actually doing? 2. Adjustment. Once you see change, don't deny it, adjust. Tweak your strategy parameters. Adjust your risk per trade. Shorten or lengthen your time frames. Change your expectations, not your emotions. Adaptation is a microshift, not a meltdown. 3. Evolution. This is the long game. Every 6 months, audit your edge. Ask, is my approach still aligned with the market's current behavior? If not, evolve it. Retest, refine, rebuild. Because every market phase demands a new version of you. Why adaptability? Longevity. Longevity in trading isn't about big wins. It's about surviving long enough to see your compounding work. Adaptability ensures that survival. Think of the greatest traders in history: Paul Tudor Jones, Stanley Druckenmiller, Ray Dalio. Every one of them reinvented their approach multiple times. They didn't cling to one market view, they adapted to every cycle. They understood that success isn't static. It's a moving target. The moment you stop evolving, you start decaying. Adaptability keeps you young, mentally, emotionally, and strategically. That's why it's the real edge. Ego versus adaptation. Let's call it what it is. The biggest barrier to adaptation is ego. Ego wants to be right. Adaptation wants to learn. Ego says, this is my way. Adaptation says, show me a better way. Ego trades from pride. Adaptation trades from curiosity. And in the market, curiosity wins. The more curious you are, the more adaptable you become. Because curiosity keeps you open, and openness keeps you profitable. Practical steps to train adaptability. 1. Weekly market review. Every weekend, study how the market behaved. What changed in volatility, liquidity, or sentiment? Adjust next week's plan accordingly. Right? 2. Quarterly strategy. Audit. Every 3 months, analyze performance by setup type. Which edges are weakening? Which are strengthening? Inato. 3. Cross-discipline. Learning them. Study new markets, commodities, crypto, Forex, equities. Adaptability grows when you see how different systems behave. 4. Embrace small experiments. Never overhaul your system completely. Instead, run micro-experiments. Adapt in increments, not overhauls. 5. Emotional flexibility. When something stops working, don't panic. Breathe, reassess, adjust. Flexibility is an emotional skill as much as a technical one. The adaptive mindset, flow over force. Adaptability is rooted in one-word flow. Force says, I need to make this trade work. Flow says, if it's not flowing, I'll wait. Force drains energy. Flow creates rhythm. The adaptive trader moves with the market's rhythm, not against it. They don't control, they collaborate. They don't predict, they align. That's what adaptability really is. Collaboration with change. Because the market isn't your enemy. It's your mirror, your teacher, your dance partner. You just need to learn its new steps. Closing. The evolutionary trader. In nature, it's not the strongest who survive. It's not the smartest. It's the most adaptable. And trading is no different. Every chart shift is evolution testing you. Every pattern break is life asking, can you adjust? The rigid trader fights and fades. The adaptive trader listens and lasts. Because adaptability isn't weakness. It's intelligence in motion. It's the calm flexibility to evolve while everyone else resists. So the next time the market changes direction, don't panic. Smile. Because it's not the end of your edge. It's the beginning of your next evolution. The market will always change. The question is, will you? Chapter 10. The Law of Identity. Become the trader you're meant to be. There comes a moment in every trader's journey when you realize you're not just learning how to trade, you're learning who you are. Because trading at its deepest level isn't about charts or candlesticks. It's about character. It's not about doing trading. It's about becoming a trader. This is where the real transformation happens. When your habits evolve into identity. When your discipline becomes automatic. When your mindset stops being something you work on and starts being who you are. This is the law of identity, the final and most powerful law of trading mastery. The shift from doing to being. Most traders live in the doing stage. They do analysis. They do backtesting. They do risk management. But doing can only take you so far. Because doing still feels like effort. Being feels like truth. When you shift from doing to being, trading stops feeling like a chore. It becomes a reflection of who you are. You no longer have to force discipline. It flows naturally from identity. You no longer have to chase consistency. You embody it. Every decision aligns with your internal code. You stop fighting yourself. You start trusting yourself. That's when the market begins to mirror a new version of you, a version grounded, focused, and unstoppable. Identity-based behavior change. Most traders try to change outcomes. I want to make more money. Then they try to change actions. I'll follow my plan better. But they skip the most important layer: identity. Change doesn't stick until it becomes who you are. Let's break it down. Outcome level. I want to be a profitable trader. Process level. I will journal every trade. Identity level. I am a disciplined trader. The moment you declare the last one, your brain begins working to protect that identity. Because identity is powerful, it's self-preserving. Whatever you identify as, you will subconsciously defend. So the goal isn't just to act disciplined, it's to become the kind of person who acts disciplined by default. That's the difference between forcing change and living change. Your I am statements, reprogramming the subconscious. Every trader has an inner voice, and that voice decides your future. When you say, I'm inconsistent, I'm too emotional, I always mess up entries, you're not describing yourself, you're programming yourself. Because your subconscious doesn't filter truth from sarcasm. It takes every I am as a command. So you have to speak your new identity into existence. Start simple. Every morning, every night, repeat. I am a calm, focused trader. I am disciplined and patient. I trust my plan. I follow my process without hesitation. I am in control of myself and therefore my results. You're not lying. You're training your subconscious to believe what's already becoming true. Over time, your brain stops resisting those words. It starts aligning with them, and your trading behavior follows. Identity first, actions second, known results last. Your personal trading philosophy. Every great trader eventually creates something bigger than a strategy. They create a philosophy, a personal code, a set of principles that define how they trade, think, and live. Your philosophy is your compass. It keeps you centered when the market shakes your confidence. Here's how to build it. Define your core beliefs. What do you stand for in trading? Maybe it's capital preservation above all. I trade process, not emotions. Write your top 5 non-negotiables. Define your trading mission. Why do you trade? Freedom, growth, mastery, legacy. When your why is bigger than a dollar figure, discipline becomes automatic. Define your code of conduct. Create your trader's code. Simple statements like, I don't chase trades. I don't revenge trade. I respect my stop loss. I trade only when the edge is clear. This becomes your constitution. Every decision, every reaction, every emotion must align with it. When you live by your code, you stop drifting. You start embodying mastery, becoming the embodiment of discipline, patience, confidence. You've studied the laws. Now it's time to become them. Discipline isn't a switch. It's an identity. Patience isn't passive. It's a lifestyle. Confidence isn't built from wins. It's built from integrity, doing what you said you'd do. When you make these traits part of who you are, the market stops shaking you. Because you no longer seek stability from the market, you bring it to the market. Let's visualize this. You open your chart. There's no rush, no noise, no FOMO, just awareness, just control, just calm. You're no longer chasing signals. You are the signal. That's the law of identity at work. You've internalized mastery so deeply that external chaos can't touch you anymore. Identity is built by repetition, not resolution. A new identity doesn't appear overnight. It's carved trade by trade, day by day, decision by decision. Every time you follow your plan, you cast a vote for your future self. Every time you break discipline, you cast a vote for your old self. Your identity is the sum of all your votes. But here's the beauty. You don't need to be perfect. You just need to outvote your past. One good decision outweighs 10 bad habits. One disciplined trade rebuilds your confidence. One no-trade day rewires your patience. Each act of integrity reinforces the new you. That's how identity grows. Not in leaps, but layers. The feedback loop of identity. When you shift your identity, your behavior changes. When your behavior changes, your results change. When your results change, your belief strengthens. That belief reinforces your identity. And the cycle continues. It's a self-fueling loop of growth. That's why identity-based trading isn't just powerful, it's permanent. You no longer need willpower to stay consistent. Your habits flow from who you believe you are. The trader who says, I am disciplined, doesn't try to follow rules. They just do. The trader who says, I am patient, doesn't force waiting. They're simply not in a rush. When identity aligns with action, everything becomes effortless. Trading as a mirror of self-mastery. At this point, you probably realize something deeper. Trading is just the mirror. The market reflects your patience, your discipline, your fear, your ego. Every mistake on the chart reveals something about your character. So as you master trading, you're really mastering yourself. Trading becomes your dojo, your training ground. Each trade tests your awareness. Each loss tests your resilience. Each win tests your humility. And over time, you evolve, not just as a trader, but as a person. You start bringing trading principles into your life. You become calmer in chaos, more patient with people, more strategic with decisions, more grounded in uncertainty. Because the person who can stay calm during a market crash can handle anything life throws at them. Trading isn't about money anymore. It's about mastery, then building a legacy mindset. Eventually, trading becomes more than performance. It becomes legacy. Legacy isn't about how much you make. It's about what you become in the process. You're building a mindset that outlives the market. You're shaping principles you can pass on to your students, your children, your future self. The legacy trader isn't chasing quick profits. They're cultivating timeless wisdom. They see every loss as tuition, every win as feedback, every phase as evolution. They trade not just for income, but for impact. That's the trader you're meant to become, one who turns pressure into purpose and purpose into power. Practical exercises for identity integration. Here's how to lock in your new trader identity. The daily declaration. Write your I am statements on a notepad. Read them out loud before you trade. Speak with conviction because repetition rewires identity. The identity journal. After each trading day, write one line. Today, I acted like your trader identity. Then describe how. Track your growth as you evolve into that person. The identity anchor. Choose a physical reminder, a wristband, desktop note, or wallpaper. Every time you see it, it reminds you who you are becoming. The visualization ritual. Before the session, close your eyes and see your future self trading. Calm, focused, patient. You're not imagining your programming. And the weekly identity audit. Reflect every weekend. Ask, am I living like the trader I want to become? If not, adjust your behavior, not your dream. Identity, freedom. Here's the paradox. When trading becomes who you are, it stops controlling you. You no longer chase trades for validation. You no longer fear losses as personal failures. You no longer need the market to prove your worth, because your worth comes from identity, not outcome. Freedom isn't found in profit. It's found in peace. And peace comes from knowing you're aligned with your process, your plan, and your purpose. That's what true mastery feels like. Not excitement, not fear, just calm power. Closing, the trader you were always becoming. From the first chapter to this one, we've explored 10 laws, 10 mirrors of mastery. And now, as we close, understand this. You were never learning to trade the market. You were learning to trade yourself. Because every law, the law of mindset, the law of emotion, the law of risk, the law of patience, the law of adaptability, wasn't just about charts. It was about character. Trading is the vehicle. Mastery is the destination. And you right now are already on that path. You don't need to chase the identity of a successful trader. You're becoming it with every act of awareness. So the next time you sit before the screen, take a deep breath, center yourself, and remember, I don't trade the market. I trade me, and I am calm. I am disciplined. I am patient. I am the trader I was meant to be. Conclusion. The final law, you are the edge. There's a truth most traders spend their whole lives chasing. They think it's hidden in a chart. They think it's locked inside an indicator. They think someone else knows it, and they just haven't found it yet. But here's the revelation, boss. The edge was never out there. It was always you. Because no strategy, no signal, no system will ever outperform a trader who has mastered themselves. The market is a mirror. The market has no emotions. It doesn't care if you're excited or scared, rich or broke, hopeful or desperate. It simply reflects you. When you are impatient, it shows you chaos. When you are disciplined, it shows you rhythm. When you are greedy, it teaches humility. When you are focused, it rewards clarity. Every trade is feedback not about the market, but about your state of being. So the greatest indicator isn't RSI or MACD or volume spikes. It's the mirror in front of you. It's your ability to stay calm when everyone else is panicking. It's your willingness to wait when others rush. It's your consistency when others crumble. That's the final law. That's the ultimate edge. You don't control the market. You control your reactions. Every trader enters the arena wanting control. Control over price, control over outcomes, control over the chaos. But the truth is, control is an illusion. You can't control what the market does next. You can't control how long the trend lasts. You can't even control whether your next trade is a win or a loss. The only thing you can ever control is you, your reactions, your mindset, your preparation, your process. That's where true power lives, not in prediction, but in response. When you finally accept that, fear begins to fade. Because you realize the game was never about winning the market. It was about mastering yourself within it. And when you master yourself, the market no longer feels like an enemy. It becomes your training ground, your mirror, your teacher. The path to mastery is internal. The greatest traders aren't the ones who analyze the best. They're the ones who know themselves the deepest. They know their triggers. They know their ego. They know how to sit still when the world screams, "Trade now." Their calmness isn't luck, it's crafted. Their patience isn't natural, it's built. Their confidence isn't arrogance. It's earned through repetition, failure, and reflection. The path to mastery isn't outside in. It's inside out. Every law you've learned in this audiobook, from mindset to identity, was never about controlling the market. It was about building the person who could flow with it. Because when the trader evolves, the results follow. The 10 laws are not rules. They are reflections. Maybe you've noticed something along this journey. None of the 10 laws were really rules. They weren't commandments carved in stone. They were reflections, mirrors of the person you're becoming. Each law revealed a version of you. And the law of mindset showed you the power of thought. The law of emotion showed you mastery over fear and greed. The law of business, thinking, taught you structure and systems. The law of process reminded you to focus on the controllable. The law of risk protected your longevity. The law of discipline trained your habits. The law of self-awareness exposed your patterns. The law of patience stretched your timeline. The law of adaptability taught you to evolve. And finally, the law of identity helped you become the trader you were meant to be. Each law was a mirror. Each reflection brought you closer to mastery, not of the market, but of yourself. So when you listen back to these lessons, don't treat them as tactics. Treat them as truths about your character. Because once you transform the person behind the keyboard, the trades will naturally follow. The journey never ends. Mastery isn't a finish line. It's a rhythm. It's a dance between patience and progress, between learning and letting go. Every trader, no matter how experienced, wakes up to a new lesson each day. New market conditions, new emotions, these new challenges. The journey never ends, and that's what makes it beautiful. Because the goal isn't perfection, it's evolution. It's waking up a little more aware, a little more patient, a little more in control than yesterday. You are not competing with anyone else. You are competing with your old self. The market will change. Strategies will evolve. Technology will shift. But the core truth will never fade. The edge is within. And that edge grows sharper with every day you commit to becoming better. From trader to master, somewhere along the way, you stop being a trader. You become a craftsman. You're no longer chasing trades, you're shaping mastery. Every setup is a stroke of discipline. Every journal entry, a note in your symphony. Every loss, a lesson in humility. This is where trading transforms from profit to purpose, from hustle to harmony, from effort to expression. You don't do trading anymore. You live it. You embody it. You become it. And in that moment, you realize this was never about money. It was about meaning. It was about who you had to become to handle uncertainty, pressure, and chaos and still stay calm. That's not just trading mastery. That's life mastery. Your legacy begins now. When you walk away from this audiobook, something will stay with you. The awareness that you are the system. You are the strategy. You are the edge. Your mindset will determine your method. Your process will shape your profits. Your character will define your career. That's your legacy, not just how much you earn, but who you become in the process. Imagine 10 years from now. You're calm, experienced, unshaken. You've seen the cycles, the crashes, the euphorias, and through it all, you remain centered. You became the kind of trader people study, not because of your charts, but because of your composure. That's the mark of a true professional. That's the legacy of a master. You don't need to predict the future. You just need to embody consistency long enough to become it. The law that transcends all others. So here it is, the final truth, the 11th unspoken law behind every chapter. You are the edge. Your psychology is the setup. Your discipline is the signal. Your patience is the position. Your consistency is the compounding. Your self-awareness is the stop-loss. And your identity is the ultimate indicator. The market doesn't create winners or losers. It reveals them. So become the trader worth revealing. Because the moment you do, you'll realize the market wasn't your opponent. It was your reflection all along. Final words, the calm beyond the candle. Take a breath. Look at where you started and who you've become. You've learned to manage fear. You've learned to embrace patience. You've learned to think like a CEO, not a gambler. You've learned to protect capital, build discipline, adapt to change, and most importantly, to trust yourself. The market will test you again. It will shake your confidence. It will challenge your emotions. And when it does, you'll smile because you'll remember this truth. I am not here to control the market. I am here to control myself. And that control, that inner calm, that's your real profit. That's your edge. So step back into the charts, not as the trader you once were, but as the trader you were always becoming. Trade with awareness. Trade with patience. Trade with purpose. And never forget, you are the law. You are the edge.